Hey, what's up everyone? Thank you so much for checking this out. My name is Dixon and this is your March real estate market update. We are headed into spring, and in today's video I'm going to share with you what the market is like for buyers, for sellers, and finally talk about the biggest indicator and the biggest catalyst that I've been talking about for months that is going to change this market for better or for worse. So let's just go ahead and jump into it. Okay, if you're a buyer in today's market, it's still pretty competitive. You're going to have to go above asking price. You still might have to remove a lot of your contingencies. But the biggest factor that's going to change your buying decision is interest rates. Interest rates have jumped from our last video at 3.75% all the way up to 4.75%, meaning that your buying power might be dwindling just slightly. So what does that mean in real numbers? So let's take an example, $1 million home with 20% down. At an interest rate of 3.75, your payment will be $3,705 with just principal and interest. With an increase of your interest rate up to 4.75, that same $1 million home with the same 20% down, your principal interest payment will now be $4,173, a difference of $468 per month. So as interest rates continue to rise, your buying power continues to dwindle. So for sellers, if you have already sold this year, if you are currently in escrow, or if you are planning to sell within the next few months, congratulations. I think you are selling at the peak of this market. I think with interest rates continuing to rise and predicted to rise into next year, I do see a lack of potential qualified buyers being able to make offers on your home. Now, if you do plan to sell, you will definitely see still a lot of demand for your home. You should see still over asking price and contingencies removed, things like that. But I may guess that by the end of this summer that you might not get a slew of offers anymore. You might get a lot more cautious buyers making offers on your property. So the biggest thing that we're going to look for in the future is interest rates. As Jerome Powell continues to raise the Fed rate, while it's not completely related, mortgage rates will also rise, and they're expected to be maybe by 5.5% or 6% by the end of this year, early next year. I do think that will diminish a lot of the demand that's in the market right now and level out the crazy trajectory of this market that we're on right now. I don't see a crash happening. I never saw a crash happening before, and I still don't see it happening in the future, but I do see a cooling off or a tempering, if you will, going forward. So my advice to you right now, if you are a buyer, please lock in your interest rate as soon as possible because they are going to continue to go up through the rest of the year and into next. And if you are a seller, please put your house on the market as soon as possible to make sure you have the most amount of buyers on the market. So if you need any help, please give me a call, 858-847-5500. You can email me at homesbydixon@gmail.com. Please follow me on all social media sites, and I appreciate you watching this. Until the next time.